Good morning, good afternoon, and good evening to all you members of the Smoking Barrel Nation. I'm Rustin Edwards, based in Geneva, with my illustrious new daddy, co-host, Matt Stanley in Dubai. Happy days, Matt. Happy days.
Morning, morning. When you call me new daddy like that, it seems a bit weird. No, yeah,
I didn't
morning.
call you Big Daddy.
No, I know. Don't. Let's just leave it there. No, yeah, thanks. Yeah, look, I mean, a surprise to many. I've kept it quiet just for various reasons, but yeah, I had a little son who was born on the 26th September. Charlie Stanley joined us. Strong name, that Charlie Stanley. Sounds like he's setting up his first racketeering business with it by the age of 5 or something
Either
like
that,
that.
or he'll be like some football coach for some Premier League team.
Yeah, no, exactly. No, he's good as gold. Born healthy, mum doing fine. 4 sisters who are very happy and in love, but they've all been ill. Or 2 that are here have been really sick. So it's been a challenging week. So we apologise for lack of content, but I'm sorry about that. That I had to look after another human, and that you couldn't listen to any Smoking Barrel nonsense for a week or so. How's it been? What's going on?
We've been keeping people fed with the shorts, and so
yeah, that's good. I enjoyed those very much. So, 23 years I've been in the oil business now, and you taught me what octane means. So, thank you for that.
Yeah, the funny thing about octane, some people think octane is actually a molecule, and it's not.
Yeah. No, it's good. I mean, look, it's one of those ones. You know, if you're one of these people who's sort of on the edge of watching football, but you want to go down the pub to get involved in it. And when someone shouts at the ref because they think he's been a bit of a tosser or something, but you don't know why you're shouting at the screen, you just join in. That's what the Shorts with Edwards 101 is all about. It helps you. It helps explain what the offside rule is.
Yes.
I'm going to be doing I'll be doing a little series as well. Mine will be more about how to reverse sear a steak and how to pull the perfect pint. So, no, I'm joking. It will be energy focused as well.
Well, energy focused indeed. It is a Sunday, and the weekend has started off with a bang. We've had the issue in Israel with Hamas launching a major strike against the Israeli Defense Force in the south of Israel. A lot of rockets, a lot of damage. Hopefully, people are not being killed, but for those who have lost, our hearts and minds always go out to those who are in harm's way, and hopefully both sides can mitigate the damage, mitigate the issues, and mitigate the loss of life. However, as we are an oil energy podcast, what does this actually mean for the state of oil and the state of prices come Monday morning?
Yeah, look, second you there. No one wants what's happening. It's unfortunate. The world is in, quite a lot of turmoil right now. With the conflict, still the Ukraine-Russian one, and this Israel and Gaza, what's going on, and obviously we hope it doesn't escalate. But unfortunately, these things sadly go that way sometimes. But in the prism of what it means for energy, look, it's to me, and I think to the markets, I think that the reaction will be somewhat muted when it comes to oil supply, what it means for balances. Israel is a net importer of crude, 2 refineries there. It's what it means in the political spectrum within the Middle East. There's, I don't want to opine politically. We don't have those opinions. If we do, we certainly keep them to ourselves. And you'll have to join us at Boat Key for more of those. But it's with what's happening with the US diplomatic push, as you said, with Israel, ties with Israel, would say the Saudis, the UAE here signed the Abraham Accords with Trump broking it, if you remember him. So Israel and the UAE do have bilateral ties now. It's put pressure under the whole system. Unfortunately, I think this has taken a lot of people by surprise. Market reaction, though, going back to that, fairly muted.
Well, and I think from a geopolitical standpoint, there had been visits this last week of Biden officials with the Saudi Arabian government. MBS meeting with a couple of different folk from the Biden administration, discussing bilateral ties with Israel, discussing other military aid and things that Israel's looking for, that Saudi Arabia is looking for. And so that could have been the catalyst to launch this whole attack from Hamas's side, because what does Palestine and Israel, that conflict will continue going on, and they don't want to see that normalization of ties. So they create an issue, for lack of a better word.
Yeah.
But nevertheless, yeah, I agree with you. I don't think we'll probably see some type of upward tick in prices come Monday morning. Mainly because, okay, we've had a big sell-off here recently, and of course now you have strife in the Middle East, and that always puts an upward bias to pricing. So we probably will see a move higher on crude prices in the morning. But I don't think it's going to be a $10 rally. It might just be 50 or 60 cents, and then everything will kind of stabilize to see exactly where things are going and what people's responses are.
Yeah, look, I mean, we're recording this on a Sunday. That's how committed we are, viewers. We're here on Sunday morning, giving you some smoking barrel nonsense. But a lot of the financial markets in the Middle East are open on a Sunday. The UAE only moved to a Monday to Friday working week about a year and a half ago, or last January we started that. But the majority of the Saudi, Bahrain, Oman, Qatar, Egypt, they're all open this morning. And equity markets have opened up lower. Now, we said before we came on air this morning, is that a reflection of macro sentiment? Because we'll talk about that in a minute, what's happened over the last couple of weeks, very much risk off. Or is it a reflective of what Western markets may do in the, investment in the Middle East may be tapered off in light of what's happened over this weekend? I don't know. But yeah, I agree with you. I think that possible. I mean, look, the one question I think people will ask is, if it does escalate, is there a risk to the Suez Canal?
Well, there's always a risk to the Suez Canal, but I don't think it's like it was back in the 1970s.
Yeah, I agree.
Or even the 1960s.
Yeah, because we're not wearing flares anymore.
No, and I think that there's always an underlying risk, but the Egyptians are going to protect the canal as much as they can because they're making a lot of revenue with that canal.
Yeah.
I don't see them putting an embargo or cutting off supplies or cutting off that trade route at all. This is kind of a regional conflict between the Palestinians and the Israelis, and unless it escalates out of control, which I don't think it will, and drags in other countries, it's probably going to remain as is. But nevertheless,
I just wonder. I mean, obviously, you're on that side of it. Would a large shipping tanker owner, excuse me, would he think maybe I'll have to look at other routes rather than the Suez, which won't mean a disruption to supply, it will mean a delay in supply. So could we see the front of each curve go bid on gas oil, on crude?
Well, that's why I think we will see an uptick in pricing because of that, just that inherent risk.
Yeah. Okay.
But I don't think it's going to be a $10 rally. I think it'll be, a muted rally, 50, 60 cents, and then things will kind of peter out.
Yeah. I mean, it's not, it's a bit of a hotbed, isn't it? It has been for a long time, but East Med is becoming an increasingly difficult place to do business. The economic crisis in Lebanon, obviously the ongoing issues with Syria, the earthquake in Turkey, which hurt East Med, it still hasn't been rectified. Obviously, the pipeline between Turkey and Iraq, which apparently was going to come back, which I don't think it will. We'll touch on that in a minute. But with Israel as well, you'd argue East Med is pretty much risk off for a lot of people.
Yeah, I would think so. I mean, it's something that it's a hard area of the world right now because of all the variety of issues. And I think probably the only stable government outside of Israel is Jordan. In East Med. Egypt's also very stable as well. But when you're looking at the actual eastern coast of the Mediterranean, Jordan is probably your only other real stable government outside of Israel.
Yeah, absolutely. It's look, it's again, what does it mean as tomorrow morning? I think you're right. Front of the curve gets bid up. The market is very good at pricing in possible disruptions rather than actual ones. So I can't, like you said, I can't see much of a boost back up to the 90. Which, by the way, honestly, I'm away for 2 weeks. What's wrong with you people? What's happened to Brent?
It's going back to its normal price, which should be mid-70s.
Well, look, okay, here we go. Enough of your nonsense. Don't start.
Well,
20 28th, I was there just looking after Charlie's. Everything's happy. $97 Brent. And I turn around and it's trading at $83.44 a week later. What is going on, man?
Well, it has everything to do with what's called these wonderful two words, supply and demand.
In a week, that is a $14 risk off, is it?
Just about, yeah. And you know, a lot of it has to do with the fact that you have a global economic malaise. There was a lot of data that came out last week that pointed to that still you have the US and the EU contracting on a PMI basis, which is not good. China,
who cares about those?
China, you know, they said that they were not going to allow any more export quotas outside of what they've already awarded. And they also said no more import quota for crude. And so that tells you that Chinese demand, it may not be as strong as everybody wants to keep saying that it is. If the government of China says, hey, we don't need any more crude anymore, we're done for the year. That takes a lot of hope. That takes a lot of hope and a lot of desire to keep prices moving higher. The broken record is playing. Yes, it is. But you know, it is a demand fall off. On top of that, we had the beginning of the fourth quarter. And in the beginning of the fourth quarter, there was probably a lot of fund repricing or reallocation of assets out of commodities into fixed income. Because if you look at the current interest rates on fixed income, which a lot of government bonds are now at 5%, that's a pretty good return on your money.
Yeah.
For a risk-free asset.
16-year high, right?
So we probably had a good rotation of money out of commodities and out of other high-risk assets into fixed-term, short-duration bonds, which if you look at the interest rates, they kind of plateaued yesterday. As people buy bonds, interest rates go down. And the spread between the 2-year and the 10-year bond in the United States has collapsed to inside of 30 basis points, where over a week ago, it was at 70 basis points. So it tells you that there has been some money rotation that's happened in the world of funds. So I think that contributed to the sell-off that we saw in crude, as well as a lack of demand.
Okay. Finished? I'm being facetious, of course I am. But I'll take your bond route and I will raise you. Chinese imports of crude in October are scheduled to be the highest on record. Now, that's on Kepler data. We're assessing that. It does sort of balance itself out over the course of the next week or so based on where ships end up. At the moment, they're giving ETA for China. 378 million barrels of crude oil is heading for China in October.
Yes.
Now,
it's going to arrive. It's going to arrive in October, correct?
It's going to arrive in October.
So when was that crude purchased?
Well, mate, August.
August. What was the price of crude in August?
I've already prepared myself for this nonsense you're about to say. Mid-80s.
In the mid-80s. So actually, compared to where crude was a week ago, it was damn cheap.
Well, so what you're saying? So okay, let's say November.
When you look at the demand cycle that happens on crude oil, people are looking, you know, oh my God, there's so much coming in October. My God, demand must be great in October. Or it's the fact that it was purchased when it was cheap compared to the current pricing.
Okay, well, when crude was low 70s in June and July, why didn't we see a massive uptick in September on that logic that you've got there? Because crude was a lot cheaper then.
Yeah. But we did see high refinery runs out of China at that point. So they were accessing product out into the market. 15 million barrels a day refinery runs, roughly, give or take.
Yeah.
Which is well above what they normally do. So therefore, you know, they were importing large volumes of crude.
Look, I'm fine, but I'm saying that what the market will do, based on its retrospective view, on the 1st of November, there will be an article from Reuters or other news agencies are available, and it will say Chinese crude imports in October at a record high. Now, you and I can look through those numbers and digest them and say it's skewed here, it's because of that, and it's because of this. Your mate sitting behind a screen who's looking at on a macro basis because he's got 1,000 things going on, it's going to go, that's good, I'll buy some Chinese risk, right? So that's the intricacies the market is in. Last week, what we saw was a massive risk off. Now, like you said, new start of a quarter, coming into winter. Gas is okay. Gas stocks are okay. So the energy complex maybe isn't as strong as people hoped it would going into winter. I would argue that it was Golden Week in China, and the Chinese didn't have a chance to bid the market up as they have been all year. They weren't in the office. I say if there is the market goes bid tomorrow, the issues in Israel are purely somewhat of an excuse for the Chinese to come in and bid things up again.
If they do,
we'll see.
Because the Chinese economy is still not as strong as everybody wants to think it. I mean, the real estate market's in a shambles.
Yeah,
which is a big driver of their GDP. The manufacturing system is in shambles, which is a big driver of their GDP. So Golden Week, yes, okay, great, we've had Golden Week. They've come back, but you also can't say, oh, Golden Week, China just shut down and they weren't doing anything. They have a lot of proxies around the world that trade their oil and trade their risk, and even they were selling. So
yeah, I know. I'm talking
it's
about
not that just because China goes on Golden Week, oh, they just shut down everything and they're not going to look at the markets, they're not going to do anything. They have a lot of offices around the world that perform their functions that need to be done to keep their portfolios in a balanced position.
Okay, fine. Chinese are back tomorrow. Let's see who's right and who's wrong or whatever's going on. We spoke about something on the podcast the other week about a play that was going on in WTI in Cushing where Total were apparently putting on a position. Do you think that could have stemmed some profit taking? They were sort of leading
Cushing stocks are, as the reaction happens, Cushing stocks are starting to build.
Yeah.
And so that also is probably a bit of a risk off that's happened. And so that's also contributed to probably the sell-off because, the delivery at NYMEX, the NYMEX contract goes to expiry around the 20th of the month.
Yeah.
And then from that point, you have 3 days to dictate or to tell whoever's receiving where your oil is, what tank's it in, gauge that tank, say, yep, my oil's there. There you go, take it away. So other than that, you have to actually clear out the data, and this would actually be a nice thing on the short is how does the NYMEX actually work? The technicalities of the NYMEX contract.
It was 101.
But nevertheless, so now stocks are starting to build in Cushing, or they built last week. And so that's put a lot of pressure off the whole complex. We still have massive backwardation, and we still have high financing costs. So it's very hard for companies to build inventory at this type of this environment.
Yeah, I mean, look, our good mate and colleague in the States, Matt Smith, he wrote a really good piece this week because it was. I mean, Wednesday was particularly brutal this week. WTI got sold off over 5%, $84 barrels. Was there some profit taking? Was there, EIA report this week, the weekly stats was bearish, like you said. I know, look, gasoline cracks, gasoline refining margins, they're at the lowest they have been for a year. That's implied. That's because of implied weak demand. End of driving season now. It was end of September, beginning of September. There was no hurricane season in the Gulf Coast. There was in the Atlantic Basin, but not in the Gulf Coast. There was no disruption, no sporadic disruption to supply in the Gulf Coast. Look, it's a difficult one. I mean, look, fundamentally, our analysts, we are bearish as Kepler. They are bearish as Kepler.
What was that word?
They are bearish. I am not.
Should I ship some honeypots to your office?
No. I've got plenty. But I am the lonely bull in a field surrounded by Winnie the Poohs, right? And it's very difficult to butt my way out.
Company, by the way.
Yeah, exactly.
There's some pretty good fine analysts there.
Yeah, no, they're very good. They're very good. And they've been spot on all year. Now, I read something and it was so over the top and cliched. What do Saudi do? Right? This is the one thing I would say where the market is a little bit hesitant. The IMF said this week that Saudis are dangerously close to being a recession because they continue to cut oil production to keep prices high at the detriment of revenue. Now, I don't know. We'd have to check the figures. If prices are $10 higher than where they were producing, say they're at 8 million now, if they were at 9, but prices are $10 a barrel lower, net same. But someone called him the Taylor. I think it was a guy. on oilprice.com or something, who called Prince Abdulaziz the Taylor Swift of the oil market. What the does that mean? What the fuck? What have you got to be smoking to say that? I mean, amazing. But I don't know. It's if prices continue to drop as quick as they have, you bet your bottom dollar he's going to come out and say, you don't know what we're going to do. And it regardless of whether they can actually cut production, is different than what he says.
Yes.
Because it's the aggressive narrative that the market has bought, not what they actually do. And arguably, the OPEC cartel or the group or, plus, Saudi have been the ones who have actually been cutting to keep prices where they were. They have gone through with what they've said. If he said, we're going to not only increase, because energy, Mina Baka was on the radio the other day, good friend of ours, good friend of, very well respected analyst and commentator on OPEC Plus, especially, that the cuts will probably be extended to the end of Q1 next year, probably. Right, I think that's fairly safe to say. I would argue
that's actually a pretty safe assumption that if prices keep, if the price is not stable, they will extend these cuts forward.
Yes, I would say that there is probably a clipping off point. If it gets to 80, I think you may see Saudis cut by another 500,000 barrels a day. I think that would probably be about it. Right. But I think that would be enough to push us back into the 85, 95 range we've been in.
Well, if they extend the cuts, yes. But also, the fact of the matter is, when you actually look at OPEC, you look at core OPEC, comparing against their quotas, you've got cheating by Kuwait, by Iraq.
Yeah.
So they're against their quotas. Yet you've got Nigeria and Angola underproducing against their quota, and that's what's keeping the big shortfall against the actual quota from OPEC.
Yeah. Yeah, I mean, Nigerian production is stabilized somewhat. Libya is stabilized as well. That was a talking point only a couple of weeks ago.
But they're exempt. They're exempt from the current quota scheme.
Yeah,
in Venezuela.
Yes, but the market, when there is a disruption to supply, still reacts as it would if they were part of the group.
Well, because they are 1.2 million barrels a day of production. So if there's a problem there, that's a significant shortfall in the market.
Yeah. Yeah, look, I mean, there's probably a whole separate episode about what happens, not with how much crude has been taken off the market, but the type of crude that's been taken off the market. There was a rumor this week, Unipec are buying as much WTI as they can get into the dated window. You'd probably have to do an Edwards 101, and what that means, Russ, rather than people Googling or whatever they're going to do about what dated Brent and WTI is. All different grades of crude, but the Chinese are getting involved in buying a lot of that up because WTI is now part of the dated pool. But what it's meant is that the distillate rich crudes, the medium sour crudes that have been cut really by the Saudis, which have caused gas oil prices to roof. Gas oil, forget crude being off $10 a barrel. Gas oil is off close to $25 a barrel in the space of 10 days. I mean, that is brutal.
Well, but it's the whole overall refining margin that actually got hit this week. Because you had gasoline fall out of bed, you had your gas oil fall out of bed in relation to crude oil pricing. So everything came off with products coming off harder than crude. When you look at the gas oil, when you look at the 3-2-1 crack.
I'm looking at it now,
In December, 3-2-1 crack, 2 weeks ago, it was $33, $34. It's now 18.
I know. I mean, look, if it's anyone listening going, what are these boys talking about cracks for? Look, we're not children, okay? It's actually a term that people in the oil business use. I will be explaining it in the series shortly, but it's basically 3-2-1, 3 barrels of crude into a refinery, 2 gasoline out, 1 diesel out. And what that's basically a bellwether or a price, a value where people look at on overall refining margins, where they currently sit. And as Russ said, $19.22 they settled on Friday. That is compared to where we were. Let me see, 1 sec, please stay with me. Do not turn off. Daily, we were, just to put that into context, on the 25th of August, that was $47 a barrel.
Yeah.
So now it's $19 a barrel. I mean, that is, I mean, that is fall off your chair stuff.
Now, granted, $19 a barrel for a crack is still very good margin for a refinery. You still run your refinery, but it does show the underlying issue that demand is not as strong as it needs to be to support those types of refining margins. Now, part of the sell-off that has happened last week is the fact that it's actually very warm in Europe right now. Here we are getting first week of October done, and we're still 25 degrees Celsius in most areas around Europe.
Yeah.
Natural gas storage at 96, 97% of capacity, which is far above where everybody thought it would be this time last year.
Yeah.
And again, without any real cold weather, there's no demand draw. We've had good water levels on the Rhine, so gas oil supplies into the southern Germany, northern Switzerland area have been kept rather good. So you don't have a shortfall anywhere. You have inventory sitting in tanks and warm weather. So until there's a turn in the weather, there's going to be no gas oil demand. That's just going to keep putting more and more pressure on the entire complex.
Yeah. I mean, look, just quickly before we move on, because obviously the Russia story is a segue. This is a segue into the Russia story about diesel. But just to put it into context, what happened during COVID on the 321 crack on the 23rd of March 2020, when we were all locked down, if you remember those times, and we were making our own bread and watching Joe Wicks and all that crap. The 321 crack settled at $2.40. No one was making money then. Anyway,
no demand either.
No, exactly. That's what I mean. That's why it is the sort of reference point for where demand is. And like you said, that's collapsed 65% in the space of since the end of August. But I'm just sticking on gas oil, which is, again, the gas oil drum, boom, 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 to beat it. Obviously, we saw the Russian issue. What happened was, a couple of weeks ago, Russia came out and said, domestic prices are chaotic. What we're going to do, we're going to ban the seaborne exports of diesel and gasoline. And understandably, gas oil crack spikes on the back of this because a lot of diesel goes into Turkey and other places. We touched on that. Feel free to check out previous episodes, link down below, on where we spoke about that. But then this week they're back. Now, we did say, Edwards, how long would those exports be banned for?
About 2 to 3 weeks.
Gosh, when did they come back?
About 2 to 3 weeks this week.
Oracles. No, we're not. But it's
well, it's not being an oracle, but it's the basic understanding that inside of Russia, the infrastructure is not as robust as they would want you to think. They only have so many tanks available for storage of product. Yeah. After those tanks are full, they have to either shut down refineries or export barrels. And so they've gotten to the point where the secondary and the tertiary storage is full. Prices have come off, and they don't want to shut down the refineries because, they have this little thing going on in Ukraine that they need to supply jet and diesel to their military, so they have to keep the refineries running. Now, this whole issue also coincided with a very large turnaround program for the refineries in Russia, which all those refineries that were in turnaround are coming back. And so it's a bit of, we got these refineries that we're going to bring back online, therefore they need to produce product, therefore they need to go out to the marketplace. And from the statistics, Russia exported 50% of their diesel production to the world because they don't need all the diesel that their refineries can produce. They're an export-driven economy when it comes to their oil and products.
Yeah. I'm just having a look here to see where. So I have the ways, people. I have the ways. Gas or diesel exports. Yeah, September they were low. I mean, they were the lowest they have been for a while. Lowest since they've been is since October 2020. Russia exported 22.7 million barrels of gasoline and diesel. That's over a 3-year low. So, yeah, look, whether that comes back, we see that coming back. We said as well, or I said, being the skeptic old man that I am, are Russia poking the bear? Are they sort of saying, this is our leverage, we're going to cut diesel exports today? What happens to prices? Do they go bid? Because that is the leverage that Russia have. in the energy space. Are they actually going to follow through with it? Arguably, they did in September. Exports are dramatically lower than they were. I mean, comparing it, we've got to compare it. March this year, Russia exported 38.7 million barrels of gas, oil, and diesel, and September 22.7. It's a sizable drop. So, arguably, would gas oil have been, would the sell-off on gas oil be even more pronounced than it has been with this general macro risk-off sentiment if there was all that material back? I don't know.
I would think that if they didn't cut back because of their own refinery turnaround program, I think prices would still be lower because you'd still have that much more volume in the marketplace. Yeah. I mean, we're in a very interesting position because we've had a very large turnaround program in the United States, one in Europe, one in Russia. Demand has been so poor that we're actually building gasoline stocks in the United States with almost 3 million barrels of refining capacity offline.
Yeah.
Which is kind of unheard of unless you're in a really bad economic state in the United States. And that type of demand data shows that consumers aren't driving as much as people would hope for. I mean, we're talking 1 million barrels a day of demand that just kind of fell out of the woodwork. I mean, where did it go?
Yeah, I mean, just to put it into some context, because we like context people, we're context people. $136 a barrel it was on ICE gas oil futures at the end of September. And today, or the low on Friday, was 112. That's a sizable drop, and any gas oil bulls are there have had I'm sure they're still in the pub from Friday. Actually, I'm sure they slept there overnight because there's nowhere else to go. They're not allowed home. Their wives hate them. No, I'm joking. Yeah, look, it's interesting. Look, the Russia diesel story. These things are going to pan out. I mean, we're thick in the middle of maintenance season now. Saudi's going to enter it as well. That's probably, we think, around 600,000 barrels a day of Saudi crude that will have to go into the market because the domestic refineries will be down. That should, in theory, skew the fundamentals and would justify risk off on crude because there's more oil than there was before. I don't know if that's working that way. I think that the proof is in the pudding there. The bulls are certainly eating that, but it's going to be interesting to see what's going to happen. I mean, we're launching a new product. Kepler are launching a new product. This is not a shameless plug, kind of. We're launching a new product for refineries. It's a unique product, so we'll be able to see what refineries are down, how much that disrupts balances. That's going to launch some stage in Q4. And I think for this time of year, refining maintenance season, it'll be interesting to see what is actually down, how much of a disruption that has to flows and where things have to come from, because European refineries down for maintenance. ULSD is required for winter, coming into winter. Where do they get it from? I think the next couple of weeks is going to be interesting to see what happens there on those kind of flows.
Yeah, it will be. And, when you think of the energy balance within Europe, you've got, Germany announced they're going to restart up or bring out a mothball some coal-fired power plants on standby just in case they need them for power supply going into the winter as well. I mean, so, you do have a lot of things that are coming in place that could keep the lid on demand in Europe if there is a cold winter.
Yeah, look, I think that's a very good point, actually, and a good one to close on, because there's been a few conferences recently. It's conference season, people, believe me. There was one after APEC. Obviously, we covered that the other week. And then it went straight into what's called Cold Trans down in Bali, where the sort of Asian community get together and talk about coal. I mean, a little bit. The rest of the time is spent on, in drinking bintang on the beach. But I mean, that's okay. But it's amazing now how sort of across the barrel conversations are happening. It doesn't really matter if you're in coal or LNG or you're a fuel oil trader or a naphtha trader. The whole energy complex is everyone is discussing it. It doesn't matter what if you want to silo yourself. Well, I'm a naphtha trader. I don't care about coal, because it has a balance on what may happen with, say, power generation. Like this week, my colleague Laura, she wrote a really good piece about Japan, 4 nuclear power station startup. have started up, which means they're going to buy less natural gas, which means they'll buy less coal, which means they'll buy less fuel oil. So, you know, all these secondary power generation, it is all linked. And I don't think you've ever seen, I'm not saying we're sort of dancing around a campfire singing a kumbaya as an energy market. That'll never happen. But I would say that a lot more desks are talking to each other than they ever have done before.
Well, you have to have that open line of communication across the energy spectrum because we are in the midst of energy transition, like it or lump it, that's happening. B, you've got all these different competing BTUs that are going to go back into the energy mix. And I think anything that the invasion of Russia proved was that you can't be siloed, because once one thing goes cattywampus on pricing, i.e. natural gas goes through the roof, it does have a knock-on effect across the spectrum, because that being a power source for a lot of things that produce other goods and other petroleum products.
100%. 100%. Look, I mean, we can't have an episode without touching on freight. How's that going for you? How's the freight market doing?
So tanker rates are stable, a little bit lower, a little bit under pressure, but stable nonetheless. Still looking good. Dry bulk and container rates are fairly poor. I think dry bulk's actually performing better than container rates, but container rates are all-time lows, overcapacity, and not a lot of demand for consumer goods.
Really?
Yeah.
I thought that. Okay. I mean, okay. I thought containers were sort of over that. You know, they had
a small pop.
Oh.
In September, and came right back off again.
I don't know. Another plug, Kepler acquired Marine Traffic. So, we get the Marine Traffic app and you can see how much, I was just in Jebel Ali the other week, like I said, and it was busy. It seemed busy, but I don't know if that's a regional thing or what's going on. But, well, long may it last. I just want to touch as well. There was an earthquake, I think yesterday in Afghanistan. The death toll is mounting, and it's just the world that is going through some issues at the minute, I've got to say. So my thoughts are with everyone's. I'm sure yours are as well, and I hope everyone's as well as they can be.
And one of the plugs I always like to say is that if you can support the Red Cross or the Red Crescent, please do, so they can go out and assist in all these issues around the world. So we'll see how things are going. So conference season.
Yeah.
I'm speaking next week at the Argus Biodiesel Conference.
Nice.
So we'll be discussing energy transition in the maritime industry.
Nice. Then we've got we've got a few things coming up. We've got Bari Week coming up, which is a sort of week where the shipping community and energy community get together in Dubai. Stay tuned. What more about that? It might be a surprise visit from His Highness Edwards. But no, thanks everyone. Look, Sunday. Let's see what happens on the Monday opening, whether there's a pop because of the Israeli issues. And so, look, again, we hope everyone's all right. Turmoil seems to reign at the minute. Let's just see what happens in energy markets.
Yep. So on that say, we all bid you a fine fair due. Please like, comment, and subscribe. We're on Spotify, we're on YouTube, and LinkedIn.
Yeah. Ciao.